Hi, and welcome. You're listening to the X22 Report. My name's Dave, and this is episode 1817A, and today's date is March 17th, 2019, and the title of the episode is Basel III Activates Gold. Gold will bring down the Fed. Now, don't you just love it when you find a $20 bill in a jacket pocket you haven't worn in ages, or a purse you've not used for a long time? Well, imagine this, finding hundreds of dollars in the papers that are sitting in your file cabinet. I'm talking about that old 401k paperwork. That money is sitting there doing nothing. Our friends at Noble Gold can cast an eye over that lost paperwork and see if you qualify for a precious metals IRA with it. So they're offering one of these special Morgan Silver dollars for all qualified IRAs above $20,000. So dig out the old paperwork and click the link below to get started on your gold IRA. Let's get into the economic collapse financial news. Now, I just did an interview this week with Bix Weir, and we were discussing gold, we were discussing The Economist, we were discussing Q. And we know that The Economist magazine back many years ago predicted that in 2018 we were going to see the gold standard. Or they just had a piece of gold there with the date 2018 on it. And very interestingly, during a Q&A session, and Annan asked Q, are we going to take down the Fed? Are we going to get rid of the central banks? And Q responded that gold is going to destroy the Fed. Now, this is very interesting because right now we have The Economist, which predicted in 2018 that gold was going to maybe be the new currency, or gold was going to be used in some way. And this was in the year 2018. And Annan asked Q the same type of question, or a question about the Fed, and Q responded that gold is going to destroy the Fed. Then we see Basel III. And within this new Basel III regulation, gold is going to be counted as money. We're going to get into that in just a minute. But I wanted to head out to the UK. And we understand that May is pushing her deal, and Parliament, the people, they're continually rejecting it. Well, we all know that it's an EU deal. And we know that this is a central bank deal, and this is the way they want it. They're not going to give on it. So it looks like May's deal, or I should say the EU's deal, was rejected again by an overwhelming 149 votes on March 12th. Theresa May has penned a public warning to MPs to back her twice-rejected Brexit deal, or else we will not leave the EU for many months, or if ever. She said if Parliament cannot agree to this deal before the European Council on March 21st, we will seek a short technical extension to pass the necessary legislation. If it cannot, we will not leave the EU for many months, or if ever. Now, this is exactly what the central bank wants. We've said this from the beginning. We know what we would like. Trump has said we need a better deal. The people want a separation of the UK from the EU. They don't like the deal that May is pushing at them, because it's really an EU deal, and the EU doesn't want to budge. What is their real plan? Their real plan is to keep the UK in limbo. Why? Because if they keep them in limbo, they don't leave. Everything stays the same. And the central bankers, this is how they work. Let the government argue about nothing. We'll sit back and just keep everything the way it is. Put everyone in government, the people, at each other, and make sure they don't look at the central bank, because we're the ones who are causing it. What do you think happens in the United States? The central bank, the deep state, they keep the people fighting with each other, so we truly don't see the enemy. And this is what is happening out in the UK. And this is really their agenda. They didn't want to have a deal with the UK. They don't want the UK leaving. And if they were going to accept the EU deal, guess what? It was in their favor. But they knew that it was not going to be accepted. They knew that they were going to be in this limbo state. And we've said this many, many months ago, and here we are today, where they're going to be in this limbo state. Unless the people of the UK get together, government gets together and says, you know what, let's just leave. But again, they're going to have to put forth another amendment to do a no-deal Brexit. And the people need to be behind this. Here in the United States and Canada, we see housing bubbles. Now, what's very interesting is that the Canadian housing market, well, they're in a category of their own. No housing market in the U.S., no matter how crazy the housing bubble one was, which began to implode in 2006, or how crazy housing bubble number 2 is, or was, can hold a candle to the most splendid housing bubbles in Canada. This is coming out of Wolf Richter. He's looking at the Canadian market, and he says this housing bubble in Canada, in all these different cities, is unbelievable. And Vancouver, the housing bubble is 316%, going all the way back to 2003. That means the housing values have increased 316% since 2003. I mean, this is way more than we've ever seen before. If we compare it to San Francisco, well, it's way above San Francisco's bubble. Now, San Francisco Bay housing prices soared to 121%. Vancouver soared to 316%. Almost 3 times that of San Francisco. That's how big that bubble is. If we look at Toronto, this has increased 218%. Again, much larger than the San Francisco bubble. Montreal, same thing, 158%. The housing bubbles in Canada are gigantic. Nothing like we've ever seen before. And we know what's going to happen. It happens every single time. When the bubbles pop, everything comes crashing down. And already we're starting to see prices decline. We saw this back in 2006, going into 2007. All of a sudden, prices started to flatten out. Prices started to come down. Nobody really knew what was going on. It happened in certain cities at first. Other cities were fine. And then it started to spread across the country. This is what's going to happen to Canada. It's going to happen to the world. Because we are in an economic, illusionary economy created by the central banks. And right now, Trump's mission is to bring down and take over the central bank establishment, to get us out of this economy that works on debt. Now, we know the Federal Reserve is going to be meeting on March 19th. Actually, there's a lot of things happening on March 19th. The Federal Reserve meets, and they're going to discuss if we should raise the interest rates, keep them steady. I think they're going to keep them steady. Actually, there's word now that they might not even raise rates this year. Some are saying maybe in the third quarter, which I think is going to happen. What I think is going to happen, I think most likely they'll just skip over it and nothing will happen this year. Why? Trump is in control. Patriots are in control. So what else is happening on March 19th? We know that Q has this countdown going, and T-0 is March 19th. We also know that lawyers have to make a case in regards to Epstein's sealed files, that they should remain sealed or they're going to be unsealed. So we have 3 things actually happening on March 19th. Do I think this is a coincidence? Absolutely not. But let's go back to the question the Annan asked Q. Are we going to get rid of the Fed? And Q said, well, gold is going to destroy the Fed. And very interestingly, we understand that central banks, they've been adding nearly 23 million ounces of gold, up 74% from 2017. And this is the highest annual purchase rate increase since 1971 and the second highest rate in history. Russia was the biggest player. So on March 29th, there's going to be new biz rules. This is Basel III. They will go into effect. Those rules will allow physical gold bullion, but not paper gold. So physical gold bullion, not paper gold, not GLD, none of the paper contracts, to be on par with cash and sovereign debt instruments. It may be no coincidence that as March 29th has been approaching, banks around the world have been buying huge amounts of physical gold and taking delivery. For the first time in 50 years, central banks bought over 640 tons of gold last year, almost twice as much as in 2017, and the highest level raised since 1971 when Nixon closed the gold window and forced the world into a floating rate currency system. Now, Chris Powell of GATA noted that in itself is not news. However, what is news is the realization by major Italian newspaper, Sol 24 Ore, that synthetic gold, or paper gold, has been used to suppress the price of gold, thus enabling countries and their central banks to continue to buy gold and build up their reserves at lower and lower prices as massive amounts of artificially created synthetic gold triggers layer upon layer of artificially lower priced gold as unaware private investors panic out of their positions. The paper concludes that in recent years, but especially in 2018, a jump in the price of gold would have been the normal order of things. On the contrary, gold closed last year with a 7% downturn and a negative financial return. How do you explain this? While the central banks raided real gold bars behind the scenes, they pushed and coordinated the offer of hundreds of tons of synthetic gold on the London and New York exchanges, where 90% of the trading of metals takes place. The excess supply of gold derivatives obviously served to knock down the price of gold, forcing investors to liquidate positions to limit large losses accumulated on futures. Thus, the more gold future prices fell, the more investors sold synthetic gold, triggering bearish spirals exploited by the central banks to buy physical gold at ever low prices. The only way governments can manage the level of debt that threaten the financial survival of the Western world is to inflate or debase their currencies. The ability to count gold as a reserve from which banks can create monetary inflation is not only to allow gold to become a reserve on the balance sheet of banks, but to have a much, much higher gold price to build up equity in line with massive debt in the system. So what we're seeing right now is that gold is being suppressed down so countries around the world accumulate as much gold as they possibly can. And with Basel III, it says that physical gold, not paper gold, so that's why they're getting out of paper gold, will be on par with cash and sovereign debt instruments. Well, think about it for a second. What will bring down the Fed? What will bring down the private Western central bank paper currency system? Physical gold. Not the paper junk that they throw at us. Real gold. As real gold rises in price, and remember, right now it's being suppressed, so a lot of countries are taking advantage of this, purchasing a lot of gold because they know that gold is going to rise. And once gold starts to rise, yes, maybe the dollar will rise with it for a short period of time. But as gold continually rises, it's going to outshine, no pun intended, the debt note, which is the dollar, which is the euro, which is all paper currencies. Gold will show the true value of the central bank's fiat currency system. And when people realize that the paper notes that they're holding are absolutely worthless, well, guess what happens? People want real money. They want gold. People then will pile into gold, which will make gold price move up, which will make the paper currency decline, which then will destroy the private central bank. Think about it. Why are countries purchasing gold? Why are states in the United States passing legislation So gold can be on par with fiat currency. It can be used to pay for things outside of the Federal Reserve System. Why is all of this happening? Remember, each piece to the puzzle, when you bring them all together, you start to see the bigger picture. When you have all the puzzle pieces on the table and they're all mixed up, you see no picture. When you start to put the pieces together, a picture starts to form. And we know that Russia, China, India, Turkey, many other countries, they've been purchasing a lot of gold. We know there's been manipulation in the market. We see Basel III right now. We know the central bank system is slowing. And it's not because of tariffs. It's not because of what Trump is doing. It's because their central bank system is collapsing. It was going to happen no matter what. They were just hoping to cover it all up. When you start to put all these pieces together, you start to see the picture of what is happening. And as we continually put more and more of these pieces together for this puzzle, the picture becomes clearer and clearer. And I think what's happening is that they're setting everything up right now. The part of the plan is to set everything up and put everything in motion. So when it's time to make this switch, it is a lot easier. And we're putting all the pieces together to see what is happening. And we are going to be going through this transition. And gold, as we can see, once everything is in place, once Basel III comes online and makes physical gold on par with fiat currency, everything is moving towards gold destroys the Fed. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.